Larry, great to see you and have you back on today. You've had a very strong and somewhat out of consensus take that in many ways you see the U.S. is already experiencing a recession. What do you mean by that?
Well, first of all, I'd point out that the first quarter, to everyone's surprise, was negative. I sort of thought that the recession would start in the current quarter, but when you have a negative before you, it's probably a little bit easier to get into positive territory. I believe that the first half of the year, for sure, is going to have a negative number in front of it.
Is it the Fed's fault? Because what you basically think is happening is that kind of real incomes are being eroded. And to quote from Capital Economics today, they said the real risk is not that a recession is required to bring down inflation, but that by squeezing real incomes, the rise in inflation itself will cause a recession. So what's the Fed supposed to do at this point?
I think that's exactly right. Since the beginning of 2021, real incomes for American households have fallen on average about 3%. I'm talking about in terms of wages. Real wages are down 3%. It's very hard to get, in the long run, a positive spending number when real wages are falling. One other observation, if I might make, Kelly, here, is Diamond is a terrific banker. So one should ask why he has moved 60% into asset management. Now, that means that the only 40% of the bank is now devoted to things like C&I lending. So I think he may know where the weakness is, even though his bank is going to do quite well.
But it's ironic that we're experiencing massive asset price deflation while at the same time seeing what sounds like a pretty healthy pickup in loan demand on the ground. So did JP Morgan and other banks that have followed a similar strategy over the past 10 years, do they now need to reverse course again?
Well, I'm going to leave how they run their banks up to them. A part of the rise particularly has been with regard to credit cards, which is not exactly a sign of strength. It's a sign of households needing to make ends meet. So I'm not sure that the loan growth situation is doing well. We had a very negative set of reports just last week, particularly from the home builders. And I would also point to those two consumer behemoths, Walmart in particular, but also Target, that they had dreadful days last week. That's not a sign that you're exactly having a consumer-led rally in the economy. I think it's a sign, in fact, that we have significant weakness.